So, this stock has quietly been on a really good run, hitting all-time highs, but to me, there is still a lot more to this stock and there's a lot more growth ahead because Wall Street still hasn't really figured out this stock yet. Alright, so let's see exactly what Wall Street's saying about the stock. I'll give you my opinion on exactly what they're saying and we'll kind of break down what the opportunity is here. Just make sure you like the video if you like getting the truth out the hype, because that is exactly what you're going to get today, guys. And that's what we do right here. We break down, get in between Wall Street's BS and get down to what is actually going on with the companies, what matters with valuation, all those other things of that nature. So let's jump into it. Let's see what they have to say this time.
Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. That's going to be Megan Brantley. She's the VP of Research at Likefolio. Welcome back to the show, Megan.
Thanks for having me. Happy Friday.
Happy Friday to you. Looking forward to this long weekend. And you know what? Google Alphabet investors are having a nice time here in the month of August. It's quietly rallied to all-time highs. It's kind of out of the spotlight now. There was always this concern that they were going to lose a bunch of their search business to agents, AI agents. That hasn't taken place. They continue to perform pretty well. Department of Justice breathing down their neck. They might have to divest parts of their business, but this one keeps chugging along. Do you have the data that backs that up?
All right, we're right there. They're kind of laying it out there. All of a sudden, it's quietly doing this and quietly doing that. And wow, all the Wall Street narratives for the past 3 years about Google are not true. How would anybody ever know that? If you guys aren't sensing, it's a lot of sarcasm there, because anybody who listened to the earnings calls of all the companies involved, ChatGPT and otherwise, would know that search was not going down. Search was actually expanding and growing. The exact opposite happened of what the narrative is. This is why we have to be so careful to simply ignore the noise, guys. This is why I tell you, the shows like these, they're fun, they're entertaining for me, but if you're a newer investor, they will destroy your investing because they teach you things and they show you things that aren't to your benefit as a long-term buy and hold investor at all. Matter of fact, it just creates confusion, right? Because you would have believed that, hey, wow, yeah, that makes a lot of sense. Google search is going to get destroyed by AI, and turns out not true at all. Exact opposites happened. It's actually accelerated, and you missed out on golden opportunities right there, just simply with an easy money stock like Google. This is why we ignore these guys all the time. Who freaking cares? Same thing with the Justice Department. If you study big tech at all, they all end up in the Justice Department crosshairs time and time and time again. They get drug in front of Congress periodically. It is par for the course with big tech. This will go on for infinity probably, because somebody's got to make a show of something. Somebody's got to show that they're doing something about it. And these big companies like this, they have teams of really, really good lawyers. You really think anybody with the Justice Department are as good of a lawyer as these teams of, multi-billion-dollar lawyers that these guys all have underneath their umbrellas because they're so large? They're just not. And more importantly, the way the laws are written and the way a lot of the other factors that kind of come into those cases, these companies all know that they are already well within their rights to do what they do. And sure, sometimes they skirt the line, sometimes they get a little bit of slap back, but you never see the worst case scenario play out for these companies unless there's some sort of massive fraud or something else of that nature. You never see it happen. It just comes and goes, and maybe they get a little fine. It's not a big deal. It's a one-time hit, and they move right along with life. Nothing compared to what the noise will be, and more importantly, what the traders do and everything else. So if you ignore all that sort of stuff, you've made a lot of money on Google. Heck, if you've ignored just for the past few months, you've made a lot of money on Google because you could get some great deals on that stock just this year here. Guys, it's the same game over and over and over again. You've got to ignore these crazy, ridiculous narratives that these guys push all the time. Go to the earnings. That is where the truth lies on all of this. Not in even my YouTube videos. Screw them. Don't watch them. Watch the earnings. Get into it. Dig into those earnings. And then if you want to watch some other content, hey, great. But you're going to find the real deal in earnings, not opinions on YouTube or on shows like this or any other place.
Yeah, right now it seems like on our end, investors are really betting on Google's strength in cloud and AI. And we do have some exposure here. We do have some insights when it comes to that cloud infrastructure. And when we look at our data, at least in terms of web visits, we actually have Google Cloud gaining the most market share versus the current leader in terms of overall consumer mind share, which is AWS. And we know last quarter, this was a major driver of Google growth. I think that cloud revenue grew by about 32% year over year. And when we look at our forward looking demand, we see those figures up by nearly 30% year over year. So at least on our end, we definitely see some, on our end, we see cloud and AI as two big growth drivers for Google. And that chart that you were just explaining really shows why. It shows how Google is kind of pulling away from the pack, at least in forward looking consumer momentum. We know that last quarter, this was a big driver of Google revenue. I think that, Google Cloud revenue was up by about 32% year over year. And we see this pace keeping up. We're right on track with that. And so for us, we continue to see this as a growth driver. But as you mentioned, there are some vulnerabilities. Search is a big area that we're watching. Just when it comes to, overall consumer behavior shifts, we're watching, and we do see signs of shifting consumer behavior when it comes to people finding information, especially younger consumers who may be more inclined to go search on that AI app versus use a traditional Google search. We're also seeing some signs of, rising zero-click searches. And so for a company like Google, or Alphabet, I should say, where, the bulk of revenue is coming from the search ads, if you have fewer consumers who are actually clicking on those ads, that could spell bad news in the long run. As you mentioned, we haven't necessarily seen that come to fruition yet, at least in the minds of investors, but that's certainly something.
No, that's not in the minds of investors. That's actually what the earnings says. So it shows you even somebody like this who's deeply involved with Google and chasing trends and all this other sort of stuff, they're not listening to the earnings. The earnings tell you the real deal of exactly what is going on here. And oh, by the way, for a dying company, having that sort of growth in your cloud business is incredible. And so what if, let's just say 5 years from now, 10 years from now, whatever the time frame is, 2 years from now, it doesn't matter. Search starts to decline. Well, if you're seeing cloud grow at that level, it's going to make up for that revenue. And more importantly, there's nobody that does ads better than Google. Meta, 1 and 1A there, or, put them right there in equals. Everybody else is trash compared to them in regards to doing ads the best. So that right there is going to be continue, whereas people get away from traditional media and coming more into the ad space, or, instead of buying ads on TV and cable, buying it on the internet itself, and obviously through all kinds of different avenues, you get your best bang for your buck there. And that means that money is going to continue to go there, which of course is just going to drive up prices. So even if search demand falls and you're actually serving up less ads, if you're charging more for those ads, you can actually still see that revenue continue to increase. Of course, profit margins obviously would be much higher the more you can charge. And then of course, the growth in the cloud business and a lot of other things of that nature that they have. So there's a lot of different irons in the fire there. That's why the death of Google was a hilariously bad take. There's still some out there that still think it's going to happen too. Guess we'll wait and see. I don't know. Somebody was trying to draw a Kodak comparison the other day. Laughable. Ignore silly stuff like that, by the way, when you see it across the board on lots of different things. Just laughable.
On our radar that we're monitoring to see if we do start to see some changes in how advertising dollars are allocated.
Yep. And then, you look at Chrome. I saw you guys have one chart on Chrome. I mean, this is blowing my mind here over the last couple of years, the year over year market share growth for Chrome. Is this really happening, Megan? What's going on?
I thought that this was an interesting chart just to show Google's dominance. We talked about the search vulnerability, but you can see just the massive scale of users here who are, leveraging Chrome. Second place here is Safari. And I think what's interesting to note about that is if you're a mobile user, if you're Apple, and I know you guys were talking about Apple in the last segment, if you search a query in the search bar of Safari, it defaults to Google search, right? And so I think that that's a big proponent of consumers just naturally being funneled into Google's infrastructure, that search infrastructure, which right now is its major driver of revenue. And so this just shows its continued expansion, but some of this,
And this is exactly what I like to see as an investor. You're seeing the numbers go up. You're seeing, obviously, Google Chrome gaining more and more market share, which of course means more people in some way, shape, form, or fashion are going to be served up more ads, which is what they do best. This is just where, obviously, they were saying the second one is Safari, which of course Apple pushes you straight to Google search as well the moment you punch anything into the bar there. So either way, they're dominating. That chart right there that you're seeing does not begin to show you how much of the entire world is touching Google in some way, shape, or form, even if they're going some other place afterwards. All those touch points like that are places for them to make money as a business there. That's why I love Google so much. Obviously, we'll talk about where it is in regards to valuation and a lot of other things like that here in just a second, because of course, that's what matters the most, right? You can be the greatest thing since sliced bread, but if you're, trading at 1,000 PE, not really looking to buy your stock there. But in regards to an investor, everything is pointing in the right direction and has been this whole time. That's why it's been such an easy buy over and over and over again.
Depending on how Apple moves forward with some of its own AI partnerships and integrations, it could work in Google's favor or out of Google's favor if it partners with a company like, say, a Perplexity. So definitely some vulnerabilities that we're watching in Google, but also, at least on our demand front and on the consumer front, we see continued momentum in its cloud platform. And we're also watching some momentum in its YouTube exposure, especially YouTube TV with live sports and football launching this weekend. This is another growth driver for Google long term.
Yeah, and they just signed that major deal with Meta Platforms at $10 billion also. So it might be about partnerships, maybe a white glove there on the DOJ as far as coming down on them also, because I don't think the expectations are that they're going to have to divest Chrome at this point. So we'll have to wait and see.
All right, we'll go ahead and stop the video right there. The last point there about how they're expanding into TV and everything else of that nature. I was shocked whenever I saw that one, YouTube is expanding massively. Two, that's the number one watch thing on TVs is YouTube. Blew my mind. I just was like, okay, wow, that's an incredible chart. It was shared maybe a month or so ago, but that right there just shows you how massive this is and how much more legs there is for this to go in the future here in regards to TV. Obviously, they're starting to move into, live streaming sports, a lot of other things of that nature. Everything is and of course, what is all over sports? Advertising. What does Google do best? Advertising. Again, these are just kind of all things that to me line up for a much more bullish case, but of course you don't want to overpay regardless of how great that future is. And right now, with Google, we're in the exact opposite situation we are with a lot of our other favorites that are overvalued right now. Google, to me, is still slightly undervalued. You can make a case it's fair value there. But given everything that was just laid out there, if some of these things just play out, remember, these aren't like, oh, by 2030 we'll be, no, these are things that are going to start printing money right now or are printing money right now and are continuing to grow and accelerate into the future here, which means more money, more bottom line profits coming to Google, which will make the stock even more undervalued as we move forward. Of course, unless it gets caught up in some sort of hype run, but like everybody's kind of saying, it's kind of sleepy. It's kind of quietly hitting all-time highs with not a lot of fanfare. So this is the exact scenario as a long-term buy and hold investor. You've had years now to build out a great position in Google. And for me, it's just about I'm adding bonus shares and bonus shares and bonus shares. And hey, I hope there's some sort of negative narrative about how, I don't know, the latest whatever, Chat GPT 12 is going to kill Google this time. This time will be the one, right? Let it trade down and I'll happily pick it up again because you're getting such a solid business with so many different tentacles out there going in so many different directions and really high margin businesses. And to me, somewhat at the beginning of the curve of some of these businesses, that, man, it's just going to continue to grow and be a growth beast into the future and make me a lot of money as a shareholder. So that's why I'm a Google shareholder and I will continue to buy shares on any sort of weakness. And remember, if you want to see all those buy and sell alerts in real time, get 5 free courses, get your free coaching, check out the pinned comment down there for a membership to my group where we have all that, guys. There's so much involved. Just check it out and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching and we'll see you in the next one.